Hello everybody and welcome back to FX Street. My name is Akash and today we're going to be taking a look at dollar cost averaging Bitcoin and what to expect. Right, so what is dollar cost averaging, right? As the name suggests, you average in on the asset that you're buying every day, month, week, or at a certain condition, right? Like say if the asset falls 10%, invest so much. If the asset falls 20%, invest this much, right? You have a particular trigger condition that you're looking at. Now it could be at the monthly open, it could be at the weekly open, it could be some other trigger, like I mentioned, a 10% drop or a 20% drop, right? But either way, I think dollar cost averaging is a really important investment tool that I'm also exploring. Kind of explored the idea of dollar cost averaging a few years ago, but like I mentioned, I didn't have a lot of cash in hand to dollar cost average, so I kind of resorted to trying to catch the bottom, which kind of proved costly, right? But since my last venture into dollar cost averaging, things have changed quite a bit. I have enough, I'd say a little bit more than what I used to have that I could dollar cost average into, right? So like I mentioned, right, today's video is going to be taking a look at dollar cost averaging into Bitcoin and what to expect from it, right? Before we actually get into the details of what's going to happen, please make sure to head on over to our YouTube channel and hit the subscribe button. And if you want to stay updated to the hottest trends in the crypto market, please make sure to also click on this bell icon. Right, you can give us a follow on Twitter at FXSCrypto, and if you enjoy the content that I put out both on my Twitter or on my YouTube channel, make sure to give me a follow as well at Mangyako with the 0 at the end. Right, so before we get into dollar costing average, right, I think it's worth taking a look at this article that I wrote 2 years ago, right? It basically explains what dollar cost averaging is, right? And yeah, so basically what dollar cost averaging is, and kind of in this article, right, despite Bitcoin's drop today, here's how much you stand to gain if you buy the dip. This was written on March 16th, very soon after the COVID crash, right? In this one, I kind of predicted the path that Bitcoin would take over the next few days, and I kind of predicted that the potential peak would be around $118,000, right? And since I've done this chart, I obviously do not have access to this chart now, but either way, I think it's worth taking a look at this article here where I talk about dollar cost averaging, right? And based on these projections, I kind of make this table, right, where you have monthly installments of $500, $1,000, and $2,000, and kind of a projected extrapolated targets of Bitcoin price in the next couple of months. Like this was for the month of for the year of 2020, right? We had prices all the way up to this level here up to March, but we were yet to predict what was going to happen for the next few months. And my table is based on the extrapolation of the data that I got from this chart. I'm not sure if I have the actual chart. There was another chart that I did where I kind of marked the x-axis, y-axis, and extrapolated it to the target, right? So yeah, either way, the data that the Bitcoin price that is mentioned here is basically forecasted. Let's actually check what the price of Bitcoin was in December of 2020. There we have December 2020. The price of Bitcoin was around $19,000, $19,000. So it's around the place. Yeah. So basically, this projections that I have are almost on the point. Say you were to invest $500 every month, you would acquire this much Bitcoin for each month, right? And by the end of your investment, you would have 0.475 Bitcoin, and your portfolio value by the end of 2020 would be $10,000, which would net you $4,308.09 pennies. I'm not sure, I get confused. Yeah, but either way, I think you would get a 71% return on your investment if you had dollar cost averaged, right? In the article, I further go on to mention that if you had bought lump sum, right, you would say for $500 investments, you would have acquired 1.487 Bitcoin when the price of Bitcoin, basically around $8,500, right? So yeah, so if you had lump sum invested, if you'd invested lump sum in March, right, So I think this was for June month. Yeah, for June month, you would have gotten 1.485 Bitcoin, and your total investment would be 12.5. Hold up, let me just check this. June 2018, 2019. Oh, so basically I am, okay, my bad. I kind of got confused here. For the DCA period between June 2018 to December 2019, your ROI, if you had invested in DCA, would have been 19%. If you'd invested in lump sum, you would have written 12.6%. And between 2018, June to 2019, 68% lump sum and 39% DCA. So basically, just to conclude, right? My bad. Just to conclude, what I'm trying to say here in this article is that I don't remember what's happening in this table, but what I was trying to say was that DCA was a safer option than investing lump sum, mainly because me, or anybody in the market, we kind of have no idea where Bitcoin price is going to bottom, right? And if you look at what's happening right now in the market, Bitcoin price has dropped 44% in just 2 weeks. Now, I would have never, like, if you told me a few weeks ago, probably somewhere around in Feb or like the start of 2022, that Bitcoin price could drop 44% in just 2 weeks, I would have laughed at you, right? So now, even now, right, like you could say that 2020, like this could be the bottom, right? Bitcoin price dipped down to 17,605. This, in hindsight, this could be the bottom, but as I mentioned in a lot of my articles and videos, the price could dip lower. It could dip down to 15.5k, 13.5k, 11.9k, and fill this void here, basically extending from 29.5k to 11.9k, right? We wouldn't know, right? So the point of dollar cost averaging is that your returns are safe, and that basically when you average it out, right, like say you invested $500 in Bitcoin, in Bitcoin at $20,000, and then the price goes down to 1,500, then you invest another $500 and the price goes down another $500, and price goes down to $10,000, and then you invest another $500. So basically the average of that would be somewhere around, basically at the midpoint between 20k and 10k, it will be around 15k, right? So if the price rises, say, to $30,000 from here, you would basically double your investment, right? Or this is first case scenario. Second case scenario, if you directly invested in Bitcoin around 20k and the price goes down to 15k, then you would obviously, in terms of percentage returns, you would make less, right? Let me just give you a quick. Okay, say we have $1,500 for investment, right? You invest at 20k, you invest at 15k, you invest at 10k, right? You invest $500 here, $500 here, $500 here, and this is the DCA case, right? And this is the lump sum case, right? So you would get so much Bitcoin for your investment each time, right? And say Bitcoin price goes up to $30,000, right? Now your investment, basically, right, your average buying price for this would be basically, what you have to do is this into this plus this into this plus this into this. So basically your investment price into amount invested plus investment price into amount invested. But since the investment amounts are equal, you could just average this out, and your average investment price would be $0.1. So your so let me just calculate how much this would be worth. BTC acquired, right? So if Bitcoin price hits 30k, your Bitcoin would be worth $750. Same thing if you do this for all of these coins. your total portfolio would now be worth $3,250, right? But your total investment is just $1,500. So basically what you would do is, if you want to calculate your ROI, it would be this: your final price minus initial price divided by initial price into 100. This would give you 116% return, right? In the case of a lump sum, you do not know if Bitcoin price is going to bottom at 20K or at 15K or at 10K, right? So it's really important. Let's say you invested all the $1,500 at $20,000, right? Then you would receive 20. Actually, you would receive 1,500 divided by 20. You would have this much Bitcoins, right? Let me just copy this. And if you'd invested it at 1,500, you would receive this much. If you had invested it at 10,000, you would have received this much Bitcoins, right? By the end of your investment period, say Bitcoin price is again at $30,000, then your total would be worth, right? So clearly, if you look at the ROI for this one, it would be C3 minus this divided by this. I9 minus C3. In percentage terms, you would have gotten 50% returns, right? Right. So since you do not know that the bottom is going to be at 20K, technically, if you compare, if you're DCA'd, if your dollar cost averaged into Bitcoin, you would have returned 100. You could have literally doubled your money and then some. But if you'd invested all of your money at 20K, you would have only returned 50%. Now you could get lucky and you could say you invested $1,500 at 10,000 and you bought 0.15 Bitcoin. Then your return would basically be your final minus initial divided by your initial money. Now you would have returned 200%, right? Clearly here you only doubled your money. Here you could have tripled your money in this case, right? But like I mentioned, the unknown scenario is that you never know when the price is going to bottom. You never know. The price could go down 50% from your investment and you would regret, right? So basically, if to be on the safer side, you should DCA. DCA is the best option. Dollar cost averaging is the best option in investment, especially if you look at Bitcoin. Right? Just let's take a look at Bitcoin on a right. Right, so as you can see here, the price has been on an up-only trend despite the massive 80-90% drawdowns that you've seen over the past few days, few literally 1 decade or more, right? So for an asset like this, dollar cost averaging is literally the best way to go about it, right? Now that Bitcoin price is, it's retested the 2017 all-time high. I think even if Bitcoin does go down to say this level here at 13K or even if it goes down to 11K, right? It doesn't matter if you DCA, if your dollar cost averaging, right? If your dollar cost average, your entry price would obviously average out if the price goes down lower. So this dollar cost averaging method is like the best way to go about it from investment, and it would kind of save you the trouble from kind of looking out on Twitter asking influencers or analysts if this is the bottom, or checking clickbait YouTube videos that say that this is the bottom, you should buy. And basically at the end of the video you kind of come out more confused than you were when you started out watching the video. So basically, for all those wondering if this is the right time to invest, yes, this is the right time to invest if you are going to dollar cost average, and that's exactly what I'm doing, right? I purchased ETH, right? I purchased ETH around 860 if I remember correctly. 860? No, obviously did not go that lower. 870. So I think somewhere around here, 900, somewhere in the 900 to 870, 850 range. I'm not sure when it is, but I had set an order long back, and I got a notification that was executed the other day, probably on the 18th of June, right? So that's what I'm going to be doing over the next few days, right? I'm going to be dollar cost averaging into Ethereum and Bitcoin, right? So this is a pretty simple example, right? Let me just give you another example of DCA. Say you invest the same $1,500 in Ethereum and Bitcoin. Right, for the BCA for the Bitcoin, this is the same thing. Let's do it for Ethereum, right? If Ethereum goes up to $5,000 in the end, right? Say you invested your amount at 900 and then at 1,000 and then at 1,100, and let's say this is the bottom, right? 900 is the absolute bottom, right? And it's not going to go any lower, and you invest in it as it goes up, right? You invest $500 here, $500 here, and $500 here, right? So basically you would have acquired 500 divided by the price of ETH. You would have acquired 0.5 ETH, then you get 0.2 ETH, I mean half of ETH, and do this. So basically you have so much ETH at the end of your investment period, and your total buy-in price would be the average of it. Let's not calculate that, right? In total you have 1.51 ETH, right? And even if Ethereum reaches to its previous all-time high, somewhere around 4,900, 4,800, and let's do another scenario where ETH reaches $10,000, right? Your total investment amount would be basically $3,000. You invested $3,000, you acquired $1.51 over the course of 3 investment periods, right? And if ETH reaches $5,000, your investment would be worth $7,500, right? So basically you more than double your investment, which is $3,000. If ETH reaches $10,000, you now have $15,000, right? In terms of percentage returns, you do final minus initial divided by initial. Basically 151% upswing return that you received, and for this you have the same thing, final minus initial divided by C19. You have a 400% upswing or a return on an investment, right? So this is what you're starting to gain even if you start investing in ETH right away, right? And only a mere $1,500 would turn into $15,000 if ETH hits $10,000. So basically that concludes my analysis on dollar cost averaging, what it means, and how you should go about investing in Bitcoin and ETH, especially now considering that both of these coins have never back in May or November 2021, if someone would have told me that Bitcoin ETH would go down to triple digits again, I definitely wouldn't have believed it. But fortunately for all of us, Ethereum is down into triple digits again. So I think right now would be a really good place to start dollar cost averaging for Ethereum. Even if we missed out on the June 18th rally, right? Even if I did miss out on the June 18th rally, what I would do, the crash, is I would invest now at 1,100. And if the price ever goes down, I'm going to invest again, right? That's basically my whole plan for this cycle. And I have separate fund for my leverage trading. I'm going to be trading that separately. And the money that I get from the profits that I get from that, I'm going to be investing in low cap altcoins. So basically that is my entire game plan for the next cycle. So if you enjoyed this content or type of analysis, please make sure to like, comment, and subscribe.